Hi everybody, Lance the Option Teacher here, doing this video in my daughter's bedroom. You can see all the squishamallows. There's a lot of squishamallows. How am I going to afford all that? Maybe if I sell some high yield ETFs, buy them, not sell them. If I buy some high yield ETFs, get some monthly distributions to pay for this, and that's not all of them. So if you're looking at the series, I'm going to be doing a high yield ETF every week. This week we're going to look at RQI. So RQI is a close-ended fund. It's made by Cohen and Steers. They've been around for a long time. Inception date is 2002. 1.7 billion assets under management, and their main primary goal is high current income with real estate securities, and they want to get capital appreciation. So this is a REIT that does close-ended funds. Close-ended funds are funds where they have a set amount of shares, and they could be at a discount or a premium to the net asset value. Asset focuses on real estate, primarily REITs. We'll go over the main holdings they have. Also common and preferred real estate stocks. It does use a bit of leverage, about 29.6% last I checked. And they do a managed distribution policy of a fixed monthly payout. They come from the net investment income from the REITs. So when you own a REIT, you own different real estate investment trusts. They rent out their real estate, and then they pay a large percent of the income back to the shareholders. Could also be some realized capital gains, both short and long term, and possibly return of capital. I personally hold this in a Roth IRA, where the tax treatment is very straightforward. About 92.75% of the monthly distribution came from long-term capital gains, so it won't necessarily be a bad fund to have in a non-retirement account. Dividend rate is 8 cents per share monthly, around 96%, 0.96 annually. Share price is fairly low, around $10 a share though. The current yield is 8.13%, so it's a little bit better than inflation rates. And payout ratio, that means the amount of funds they're paying out compared to their net income, is about 69%, although the payout ratio usually matters more for stocks over REITs. As of recent data, RQI trades at a discount to its NAV. If you go to CEF Connect, they show a lot of different close-ended funds, and if you're at a discount or a premium to NAV, so you're getting about a 6% discount buying the shares compared to the value of all its holdings right now. So this means the market price is below the net asset value. That gives both opportunity because you're buying at a discount, and some risk if that discount gets wider and wider. It's an 8% yield. It's attractive for income-focused investors, especially those that are comfortable with closed-ended funds. It provides diversified exposure to the REITs and equities. A good way to play real estate without actually buying individual REITs or also owning property and renting it out. I personally don't want to deal with tenants trying to call at 3 a.m. saying that their toilets aren't working. And they have active management with Cohen and Steers, professional management, and leverages real estate expertise. It does give a predictable monthly distribution, as we'll see shortly. It's good for income portfolios, prioritizing cash flow if you're a retiree, income-seeking accounts, looking for real estate, broader real estate exposure if you don't want to pick individual REITs. And if you're interested in closed-ended funds, this could be a good one. Now let's look at some of Cohen & Steers holdings. Welltower is 10% for healthcare. American Tower, Digital Realty Trust. A lot of these data centers could be very interesting with AI needing a lot of data mining and whatnot. So these own the land that actually allows the data centers to work. Telecom, industrial, single-family homes, more data centers, self-storage. So it's pretty well diversified in the real estate sector. Look at the share price from 2020 to now, it was at $12 a share, and right now we're at $11.66 a share. So the actual share price moves very little through most of these up and down turns in the market. It also pays that 8-cent dividend every month. So it's about an 8.23% dividend yield. Pretty small share price as well. It's only $11.66 or so. So you could easily get in on a small position if you only need $11.66 per share to buy these. Now, a few other considerations is when interest rates go down, REITs in general tend to do well. Looking like the interest rates will steadily decrease in the next year or two. We might get another 25-point basis decrease coming up in about a month, possibly. So if you're interested in the real estate sector, this could be a good income fund to have. So again, Lance for the Option Teacher here. I'll be doing weekly videos on different high-yield ETFs. If you're interested, click the like, subscribe button so you can get updated on these. If you have any questions on this or any of the funds I give, leave a comment down below. I'll make sure to address it. Everyone have a good rest of the day, and I'll see you guys in the next video.